Hey guys, welcome back to the Wall Street Bull. Anthony here. I hope you're all doing well and staying safe out there. Massive shout out and thank you to every single one of you incredible subscribers. I really appreciate it. Thank you very much. Honestly guys, without you, I couldn't make these videos on a regular basis. So thank you very much. If you're new to this channel, smash the subscribe button down there and turn on the little bell notification, because as you can see right here, I love doing these videos on a regular basis, documenting my journey with investing, be it through cryptos, dividend stocks, growth stocks, talking about passive income, building financial freedom, and my goal at the end of the day is to build generational wealth. So come along this incredible journey. If everyone can smash the like button down there, it doesn't cost you anything. Give it a good old thumbs up. It would really help me push out this channel to a lot more people. All right, guys, thank you very much. I appreciate you. Let's get into it, guys. So a little disclaimer, I am not a financial advisor. Please do your own research and due diligence with all this stuff. Investing can be extremely risky and volatile, and I do not want to see anyone get financially hurt. Please jump on all the websites I've recommended in all my other videos. That will give you a lot of confidence before investing. Me, my golden rule is I only invest what I can afford to lose. Yes, we do not like to lose, but you have to set a limit for yourself because you can lose money like that. All right, so please be careful. Do not take what I say as financial advice. All right, guys, formalities are out of the way. Let's get straight into my dividend portfolio, because this is an incredible its strategy, or different to cryptos. It's been awesome so far. I use Stake here in Australia. For those of you who are new to dividend stock investing, Stake is like the our Australian brokerage where we buy stocks over in the US. There is a referral link below. If you use that, you can get a stock in free in Dropbox, GoPro, or Nike. And yes, I will show you that I have literally got so many stocks in GoPro, guys. 26 shares of GoPro, Dropbox, guys, 8 shares, and yes, I do have one in Nike, so that does happen. You will get one of those if you use that, so please feel free. All right, guys. Portfolio is sitting at $30,398.05 USD, and I'll show you the Australian value in my dividend tracking app. I am mainly a dividend stock investor. I don't like to invest in risky stocks, although I have done that in the past and I'm holding them still. I don't sell my stocks. I have the plan never to sell these stocks. They will be handed down generation to generation. This is the reason why, because I love dividends. They provide passive income and it will grow and compound over time. All right, so again, $30,000 USD. I've had a day return on Friday because the market's closed now over the weekend, $35. I've had a total return of $6,426.28. That is ridiculous, guys. 26.81%. Yes, it's a lot of money for dividend stocks. It's not like cryptos where it's like you get 1,000% return. This is a different form of investing. This is long term, easy going, very slow, guys. And you can see here again, most of my stocks are in the green, which is fantastic. I have my favorite stocks and dividend stocks that I love, which for example is like XOM Mobil. This company is a great dividend paying company, guys. XOM Mobil, I have a position in this of $5,996 USD, currently sitting at 95 shares of that. It has a dividend yield of 5.61%, which is fantastic. I tend to go for dividend yields when investing in companies between 3 to 5. Because I'm at the age I'm at now, I need to start bringing in dividends a lot quicker. For example, if you were to invest in another company like Apple, for example, which has a very low dividend yield, because they are choosing to invest those profits back into the company to obviously better the technology, they pay less dividend yield. So you can see here they've got a dividend yield of 0.61%, which is quite low. But again, the growth of this company has been ridiculous. If you look at the last 3 years, look at that chart. That is insane. That's because the technology is just growing and the company's growing even bigger. So again, I've got, what have we got here? I've got 3.7 shares of Apple, and I should have more, but I'm mainly a heavy dividend investor, guys. So equity $537 USD. All right, so you can see here I've got dividends sitting in my buying power at the moment of $3.20. That is because I was paid dividends the other day on the 15th of October, and I did buy some more stocks as well. So I bought Kimberly-Clark. Obviously, they provide, the nappies, toilet paper, all that kind of stuff. It's one company that will never die, basically. Will continue because the need people have for these type of products will always be there. So Kimberly-Clark. Realty is a real estate investment trust. It is like, you're buying real estate without physically owning it. You don't have to change toilets, broken air conditioners, door handles, all that kind of stuff. They do all that, obviously, but you're investing in the company that does that. Again, they are a monthly dividend paying company, which is fantastic, and it's investment in real estate, which is always going to go up in value. And the other one is Coca-Cola, because Coca-Cola's been around for a very long time, as we all know. Everybody knows Coca-Cola. It's always going to be there, guys. It's just a long-term hold for me forever. And you can see here I was paid a dividend from VTR of 7 cents, guys. Philip Morris, obviously tobacco products, are $3.69. That is awesome, guys. So Philip Morris is a very big dividend payer, actually. So next week I will dollar cost averaging more into these stocks. I put in a small amount every single week. Excuse me, and that's why I was able to get a $6,000 return, which is crazy. So I bought all throughout 2020 when the market crashed, and I dollar cost average. And if it happens again, man, am I going to go hard at it. All right, guys, so let's get into my dividend tracking app. And actually, before we do that, one company I will aim to buy more of is AT&T, guys. I believe this particular company is very undervalued at the moment. It has been on the down the last couple of weeks. Obviously, it's sitting at $25 a share. And guys, AT&T, I believe, is very heavily undervalued, and there's a reason why. You know, there's a lot of crazy stuff going out there with, in terms of FUD, fear, uncertainty, and doubt, because the company's aiming to cut their dividend by next year. But again, when this happens, a lot of people sell out. It's like very similar to cryptocurrencies. When the fear is there, people will sell out and get scared, while the big funds, hedge fund managers, all the institutional investors will buy the dip, guys. So AT&T, for me, is a great buying opportunity. Sorry, that's Tesla. What am I doing? So let's scroll down here. Let's just have a look. See that the ticker symbol is very similar. Where are you guys? Here we go, T. All right, so $25.70, guys. So you can see here in the last month, it has been on the drop. And it's continuing to go down and down and down because of the news about the dividend cut. And shareholders do not like it when a dividend gets cut. This is the potential risk that can happen with dividend investing. If a company cuts their dividend, say, for in half, or completely cuts it, like Disney cut their dividend out, which I don't know why, but anyway, they're just trying to obviously put that money towards obviously buying more stock and all that stuff for their platforms, Disney Plus and all that. But guys, obviously they've got huge partnerships here with Warner Brothers. They've got obviously their huge cash flow business with AT&T. You can see here, if you scroll down, right, the earnings. So if I go details, check out their revenue, guys. 2018, all in the green, guys. 2019, 2020, guys. They've been consistent with their revenue. It is consistently growing, which is fantastic. And this is one of the reasons why I love the company. I understand the technology. I understand what they're doing. That's a big thing as well. If you don't understand the company you're investing in, do not invest in it. That's basically what I only invest in companies that I understand, really. All right, so you can see here the recommendation: strong buy, and hold 65%, guys. So it's a great revenue generating machine, guys. They literally print cash. So this is one of the things, guys. It's not going to stop. Technology is only going to get bigger in the future, guys. So $25 a share is a great opportunity to buy in. And again, their dividend yield is sitting at 8.12%. So if they cut that in half, it'll still be 4%. So I'm not concerned about that whatsoever. I'm just going to be adding to my position. I'm currently sitting on $906 in equity, guys, 35 shares. And again, for us, I mean, in Australia to buy stocks, it's quite expensive in the US because we lose a lot of money, which is annoying. But guys, definitely want to consider AT&T. Right, straight into my dividend tracking app. I'm not affiliated with this. It is available on the iOS App Store. Get that, guys, if you wish. It's an awesome way to track your dividends, and it's not expensive at all. So my annual dividend income is $1,434, guys. I'm on a month on average $119, which is awesome. $3.93 a day, which is great. Yield is at 4.43% across my entire portfolio, which is a great range. And I'm yet to receive a dividend in 5 days of $8.45 from Prospect Capital. And you can see here my top payers are XOM Mobil, $449, SPHD, $173, Realty Income, $121, EPD, Enterprise Products Partners, guys, oil and gas company, pays me $114 a year. Prospect Capital, $101, AT&T, $98. If that gets halved, I'm not worried about it because I'll just keep dollar cost averaging into my position. VYM is an ETF, guys, a huge dividend fund. Vanguard is the biggest of the biggest, $74. Stag is an industrial REIT, so factories, warehouses, pays monthly as well, $58. And AGNC is an investment company, $24 every single year. That pays monthly as well. So let's keep scrolling here. I've got a goal of $20,000 a year. It's taking a while to get there because I have been more focused on cryptos, building up my position there, hoping to get back into everything really. 31% is from energies and minerals companies, and dividends receivable this month, $37 I'm yet to receive. So here's the magic place right here where I love if it wants to load. Look at that number, $40,919.42 AUD. That is incredible. I've had a total return in Australian dollars, $8,589, 26%, guys. That's awesome. These are all my companies here that I'm holding at the moment, so I've got quite a few, obviously. But if we go to the chart, which I love doing, 10 years, it'll be worth $67,000 if I reinvest the dividends. If I do not put any more money, if I just simply reinvest the dividends, guys, into these companies, it will bring me in $4,577 a year, which is ridiculously good. 20 years is where the power happens, guys. My portfolio would be worth $205,272.44. I will never sell these ever, guys, because this is the power of compounding. If you never sell it, guys, it will just continue to grow and compound over time. $23,000 a year in dividend income, completely passive. That will go up as well as companies make more revenue. They will then increase their dividend payouts, and that number will only grow over time. I will never sell these ever. Don't care what happens. Never sell your dividend stocks. You can see here, guys, July, obviously now, where are we now? We're in October, guys. So again, I'm yet to be confirmed, $17 in dividends. November, $41 has been confirmed, $68 to be confirmed. December's a big dividend paying month, $194. January, $61. February, $108. March, $189. April, $64. May, $106. June, $185. This is a lot of money for some people, guys. It's incredible. Obviously, if you've got these huge hedge funds, imagine what they get in every month. It'd be ridiculous. All right, guys, you can see here at $64 a month. This is what I'm wanting to build up. This is one of the reasons why I bought Coca-Cola, because I'm wanting to build this month up to $100 minimum. So Coca-Cola, KMB, $4.16. Philip Morris, $4.97. If I build these companies up, obviously, and you can see here, obviously, you've got monthly pay, like Realty pays me $10 a month. Prospect Capital, $8 a month. And again, SPHD is an ETF as well. That pays me $14 every single month, guys. So that's crazy stuff. That's pretty much it in terms of my dividend portfolio. This is another form of investing that I love because it's completely passive. Again, it will only go up in value over time. This is why I'm a long-term dividend holder. I will never sell my dividend stocks. Let me know in the comments below, are you interested in dividend investing? Are you dividend investing right now? Let's talk about it, all right? Hope you enjoyed the video, guys. Make sure you smash the like button, subscribe. We'll talk about it in the comments. All right, stay safe, guys. Peace, bye.